is Sheila Launcher. His favorite website is hassle-free-cashflow-investing.com.
What we're going to do is talk about where you are, where you want to go, and then we're going to talk about how to get there, right? And so your job is to articulate, here's where I am, and that's usually going to be the 8 essential resources. And where you want to go is ultimately what we're looking for is an amount of cash flow that you need on a monthly basis, right? And so if you can say, what I'm working with is $500,000 of equity, and what I need is $5,000 a month of cash flow, then we can say, well, how to get from here to here, and we'll lay out a strategy for you that's based on your personal investment philosophy, also overlaid with what the personal investment philosophy techniques of hassle-free cash flow investing are, and help you get from here to here. And here's a big shortcut for you. Today's video is going to be full of shortcuts to help you get from where you are to where you want to go even faster than you thought possible. So here is a soundbite from hassle-free cash flow investing. If your net worth, and we're going to articulate this, your investable net worth exceeds 100 times your needed cash flow, you're basically out of the rat race. You just have to optimize your resources in such a way to produce the cash flow that you're looking for. So let's use real numbers on this, right? So if you need $5,000 a month of cash flow and you have $500,000 of investable net worth, then if you could get a 1% ROI per month, right? So that's 12% annualized, you're done. You're out of the rat race. So when you're looking at, do I invest for cash flow? Do I invest for capital gains? What am I really trying to achieve as an investor? It really starts with an assessment of where are you starting from. And so if you find that your net worth is substantially higher than 100 times your needed cash flow, then really let's help you focus on cash flow. And if you find that your net worth is substantially less than 100 times your needed cash flow, let's help you focus on how to build equity and net worth. So we break this down into 2 different categories, and we're going to ask you as a client to say, are you in aggregation mode? Are you trying to aggregate capital? Or are you trying to deploy for cash flow? Right? That's the question. Where are you at? Are you trying to aggregate capital, or net worth, I should say, aggregate net worth, or are you trying to deploy your assets for cash flow? And the question is your net worth greater than or less than 100 times your monthly expenses? So here's your expenses, right, times 100, and here's the net worth target, right? So once you've got a net worth that's 100 times your monthly expenses, right, your monthly expenses, then we can work with deploying your assets for cash flow so that you're out of the rat race and you're no longer trading your time for money. Earlier we talked about return on investment and why that's so important. And the ROI number, we're looking for the highest number possible adjusted for hassle and time. What's the highest ROI I can get adjusted for hassle, time, and years, right? So it's some kind of a made up, ROI number that's adjusted for what kind of return on investment are you getting? So what kind of money is your money making once you've adjusted for hassle, time, and years? Because we're adjusting for hassle, time, and years, we really adjust to the product types that fit our hassle-free cash flow investing to be a little bit more newer, easier to manage, simpler, low hassle properties. And so it's very, let's be real. Owning real estate is kind of a pain in the neck. It is not hassle-free, but low hassle investing didn't seem like a good marketing name, so we call it hassle-free. But really our goal is, how do we make this hassle as low as possible? If you're really, really looking for hassle-free, no hassle at all, then you're probably going to go open a CD at a bank. And even then, there's a little bit of hassle because you got to walk to the bank to fill out the bank application. So there's really no such thing as hassle-free. It's how do you get this hassle as low as possible and your ROI as high as possible. So to get that, there's a rule of investing, and we're looking at liquidity on one side and illiquidity on the other side. And so one of the rules of investing is, if you're looking for something that pays you a lot of and we'll do another one, cash flow and equity growth, right? So if you're looking for things that pay you high cash flow and you can liquidate them at any time, you're going to expect a lower ROI on the spectrum. If you're willing to invest for equity growth and you're willing for your investment to be relatively illiquid, then you can get a higher ROI. And so it's important to say, if you are in aggregation mode, you're still working at your job, you've got enough income to live on from trading your time for money, and you're trying to get out of that rat race, and you don't have a high enough net worth to deploy for cash flow, then focus over here on the highest ROI possible. Equity growth, you're building your net worth, and you're investing in things that are fairly illiquid. If you've got a high net worth, a high investable net worth, and you're trying to get out of your job and you just need to go into deployment mode, then you're going to invest for cash flow and liquidity, even though your ROI is lower. And maybe a hybrid is, you're going for cash flow over here, but you're willing to accept illiquidity, right? Or maybe you really want liquidity, but you're investing for equity. And you just find where on the spectrum you want to be, and that kind of pulls about what kind of returns on investment you can expect to make. That's possible to make those double, even triple-digit returns in real estate investing, but you can't do it while investing purely for cash flow and you just sell it in 2 days and get your money back, right? So you're going to sacrifice something to get the high returns, and the things that you're sacrificing are equity and illiquidity. Here's a paradigm shifter for you. The thing that we're looking at on this spectrum, a lot of times people will say that you have to add risk to get higher returns. How many of you have ever heard that? To get a higher return, you have to accept a higher risk. That's sometimes true, but it doesn't have to be true. It doesn't have to be true. You don't have to take on more risk to get higher returns. And if you don't believe me, then I need you to hang with me through this training series, and I will help prove to you that risk and return are not correlated, right? They are not correlated. Sometimes they are, but they don't have to be. And I'm going to show you why. Sometimes you can actually make higher returns while lowering risk. And you just got to hang in with me, and I'm going to show you over this course of this training series how we do that.
Help me go to hasslefreecashflowinvesting.com.